Hello friends, a very warm welcome to my channel. So this is another interesting video where we are going to discuss an update on the performance of Deepak Nitrite in the recent quarters and what should you do as investors if you are holding those shares. So this is some stock which we had identified a couple of years before, and from there it had given a dream run in 2021. And there was a U-turn after that, and then it has entered a consolidation phase. So a lot of our friends enjoyed the dream run and they have booked profits near the higher levels, but still there are some people who are still holding the stock and they are wondering what to do. So there were several requests to talk about this stock, and that's why I have chosen this for this video. So I'll keep the video very crisp and to the point. I'll ensure that I'll add some value to your decision making through this video. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos which I upload. And if you're not a part of the Telegram channel, do join, as we discuss daily market analysis in the morning every day and a lot of other interesting investing related stuff on a Telegram channel as well. So this video we are going to broadly discuss in 4 parts. In brief, we will recollect or revise what is the business model of the company so that you understand the later part of the video better. Then we'll discuss what are the developments in the company, how is the company performing in Q3 FY23, what was good, what was bad about these results. Then we'll try to understand the reasons for the fall in the share price. We'll look at the chart of the company, we'll see the support levels. And in the last, after discussing all these things, we'll try to understand what should you do as investors. Before we start talking about the company, never on my channel until now and neither in this video, please don't take this as a stock recommendation. I will bring out to you different facts and figures and give you my view, and based on that, you please decide on your own whether you should be holding this stock or not. So Deepak Nitrite is one of the largest and the fastest growing chemical intermediates companies in India. It has more than 30 products. It is having more than 6 manufacturing facilities in India. They are massive scale. It is market leader and the largest producer of several products. A few of them are phenol and acetone. So broadly, you can divide its business into 4 segments. The first segment is the basic intermediate segment. This contributes roughly about 18% to the total revenue of the company. The products under this segment are standard products, which are generally like bulk intermediate products. These are not specialty products. Examples of products in this segment are sodium nitrate, sodium nitrite, etc. The next segment in this business is the fine and specialty chemicals, where these are value added products. This contribute roughly about 12% of the revenue of the company, and some of the products which the company manufactures in this segment are xylidines, oxymines, cumidines, etc. We'll not get into much of the technical names. The third segment is the performance products. These are also kind of bulk products, but they are more critical in terms of manufacturing and sometimes customized as per the client's requirements, and these contribute roughly to about 7.64% of the revenue of the company. Some of the products in this category are optical brightening agents, OBA and DSDAs. So when we talk about these words in the further video, you will know which segment we are talking about. The next segment is phenolics, which is one of the latest businesses of this company, but this has become a very large segment so far. So now it contributes roughly about 62% of the business of the company. So this is also not a specialty business, and this is much dependent on the fluctuation in the material prices. So overall, these are the 4 segments in the business, and one thing which is critical to note is that it is not completely a specialty chemicals company. Only a part of the business of the company is into specialty chemicals, and a major part of the company's business continues to be in the bulk chemicals, which are prone to the movement in the material prices. Last few years, the company's performance has been extraordinary. From FY17 to 22, the revenue has become 5x, the profit has grown 21x, the ROCs have improved from about 8% to 40%, and the market cap of the company has gone up from about 1700 crores to about 30,000 crores. So this has created massive wealth for its shareholders, but all these has come up on the basis of the fundamentals growth in the company. So this gives you a broad idea about the business model of the company and its recent performance in the last 5 years. Now let's talk about the Q3 FY23 performance. So in this quarter, year on year as well as quarter on quarter, the revenue growth has been decent. Year on year revenue growth was about 15% and Q on Q about 2%. So marginally it has grown in Q on Q basis. Why I am appreciating the Q on Q growth of 2% is, in the recent quarters, things have not been that good in terms of economy domestically as well as internationally, as there are a lot of export markets which are disturbed due to geopolitical issues. So in spite of such environment, having Q on Q growth of revenue should be appreciated. And why this revenue growth was possible? Because the company maintains its market leading position in several chemical intermediates. Now coming to the profitability, you look at EBITDA. EBITDA has degrown year on year by 13% and grown quarter on quarter by 16%. So why is there pressure on the margins of the company in spite of the revenue growth? Is because of the inflationary conditions. The prices of the raw materials or input materials has been exceptionally higher when compared to the previous year. So even though they are delivering revenue growth, they are not able to maintain margins. Other thing to note is, on quarter basis, the margins are slightly improving. This is because the inflationary conditions are now coming under control and prices have started falling and the margins have slightly started improving. So this is an indication that the worst is more or less over for the company in terms of the margin pressure. A similar thing you can observe in the PAT figures, where year on year they have degrown by 14%, but on Q basis they have improved by 20%. What's happening with the stock is, it has made a high of nearly 3000 earlier and thereafter it has started entering a consolidation phase and it is moving more or less sideways now. Here it took a support at somewhere near 1700 levels, and now again it is more or less taking support in the similar range. So from its peak of 3000, the stock has fallen to nearly 1800 levels presently. And the reasons are quite evident from the discussion we had so far. The company has been able to maintain the revenue levels, but still the company is facing massive pressure on their margins, because majority of their business is from the bulk chemicals, which is prone to the movement in the raw material prices. They are able to pass on a part of it to their end customers, but they are unable to fully pass it on, and that's why they are facing pressure on their profitability. Now, what is the outlook of the company going forward? The company's management is very positive and they are expressing that the Make in India movement or the China Plus One strategy will continue to hold for the next few years, and it is a long-term trend. They have projects worth 15 billion rupees in the pipeline. They are coming up with several capexes for brownfield and greenfield expansions. They are also coming up with backward integration in several facilities to increase their margins and maintain the availability of all the raw materials which they use. They are also going downstream by adding value added products so that their margins improve further, and they are also expanding to newer chemistries like photochlorination and fluorination. So these are the newer chemistries which are advanced chemicals which have higher margins and higher pricing powers. So this kind of outlook for a company gives shareholders the confidence that the growth is still intact in the company and the future is still bright for the company going forward. Now let us also touch base upon the valuations which the stock is currently trading at. It is currently trading at somewhere around 1800 rupees, which is at a PE of 28 in the trailing 12 months and market cap to sales of 3x and price to book value of almost 6.7x. So more or less the valuations, I would say, at the current levels are fully priced. They are not something which are very undervalued and where shareholders should jump upon it, but they are not expensive either. Now, what should investors who are already holding this stock do? So we have discussed the reasons for the fall in price, which is the pressure on the profitability of the company. There were some other instances like the fire incidents and certain things which also led to this fall in the share price of the shares. But one thing you should closely observe in our discussion is, when we are talking about the pressure on margins, or we are talking about the fire incidents or any reason of this sort, all these are temporary issues which the company is dealing with. There is no impact or there is no structural change in the business of the company. The company continues to maintain its market leading position in their product range, and the company continues to have a positive outlook, and their capex plans are also still intact. As long as all these factors are taken into consideration, I feel the existing shareholders need not worry about the correction in the stock. The stock may consolidate for some time going forward also, because the margins have to further improve and go back to normal as the raw material prices cool off. And when the profitability gradually improves, the share also will gradually come out of the consolidation phase and give it another rally. And the new capex which are getting completed in the coming years will also further act as triggers for the share price to come out of consolidation. So I hope you have understood from this video the reason for the correction in the share price of the company and what is the outlook of the company going forward, and I'm sure this will give you clarity whether to hold the shares of the company or not. So do click the like button if you like the video, and if you have such questions about other stocks also where you are stuck, do mention your questions in the comments below. I will see which company is more talk about, and I'll pick up one of those companies for my next video. So thank you for watching and have a wonderful day.